Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Welcome to Trade 39. During the month of September and October, you can see we had a series of a couple of bad trades that brought us all the way down into here. That cost us about 8% of our gains for the year so far. So September and October, pretty bad months. Trade 38 ended right here at the close of this day. I mentioned before that kind of shows up the following day. That kind of shows up marked by these little white dots. But you can see the last trade we had was a slight winner. We took an exit. As you know, Adam is always trying to, buy at a lower price, sell at a higher price. That certainly happened here where we bought here and sold there. Some of these other trades didn't quite work out that way, but that's the theory. So we're out on this day, and the next day there's a big uptick. So Adam's going to set it out, hoping that price will fall or come back in line. We had an amazing couple of days here, though. From our exit price, day number one, day number two, look at this huge gap up. And day number three, we're sitting up here, several percent higher. And here comes the big question. What do we do? Do we keep waiting for price to fall? Do we think that, we want to participate in some of this? We've already missed a tremendous amount of gain here. And, partly because, from here, the second day, the third day about doubled that. So this is a tough call. But Adam's going to go ahead and decide to take an entry here. And this is a particularly concerning entry. As that unfolded, I was very concerned about this entry and where the price might go, because with this kind of a big swing up, it's likely to come back down. But let's at least get into the trade. Let's watch now as Adam places that trade way back when. It was over a month ago. You can see our order go in, and we are filled. Trade 39 is on. The setup is terrible, but let's see what happens. All right, this trade unfolded in the most unusual way. We went in on, I think, 11.6. And we sat in this trade for quite a long time. I think you remember this was the bad entry, I would say. We lost a lot of the market. We gave up a lot to the market. We were not participating. We made our entry right here. And here's what happened with this trade. The following day, generally kind of flat. The market's moving in and out. On this particular candle here, I'm a little concerned. We are below our entry price. As I said, this was kind of a poor entry, but look what happens the next day. There's a strong candle up and followed by sort of a holding position. So far, the trade's looking okay, still a little concerning. I'm thinking we're not going to stay in very long, but the following day, something interesting happens. We have a big gap up and a big move up. So now we're up this much, which is a pretty good amount, considering that the market had already moved significantly. So what happens the next couple of days? Price kind of meanders. I think it's sort of softening. And then we're followed by another big uptick. Now this is getting very interesting because Adam is sitting in this trade a long time. We're going to try and, find the right exit. I don't know if we will or not, but, the market continues to stay, reasonably flat the next couple of days. And then we get another big uptick. So I would say from this position all the way over here, though, generally the market's kind of flat. There was an uptick there. And, the question every day is, what are we going to do to try and maximize a profit or continue to let the market run? This is just sort of the exit. Let's see a little closer to what happened at the exit and the exit itself. All right, so one more day had happened, and unfortunately, I'm just going to let you know, did not capture this exit live. Little video recording problem, but we actually took the exit right at the close of the day on this candle. You can see that our profit ran up along this blue line. That's how they're marked. I mentioned they show up on the next day. We decided to take our exit here on that particular day. The market had gapped up and then fallen quite a bit, and we just decided we had had enough of that trade. Now you're going to get a little preview of the next trade, because what this screenshot actually is the next day. The market went up a little bit. We missed out on that, but we decided to go ahead and jump back in. But that's for trade 40. Let's head over the tracking sheet and see how trade 39 did. All right, trade 39 ended on December 6th. We were in that position for almost a month. During that period, the S&P rose 10.3%. What an amazing month for the S&P 500. It brings its year-to-date gain to about 19.79%. As you know, we were out for over half of that gain. We had an entry that came in late, and but our performance isn't too bad. We picked up 8.56%. Compared to the S&P 10.3, our 8.56, not so great. But if they're positive numbers, we'll take it. During the months of September and October, we lost about that same amount. In fact, just a little bit more. We're slowly clawing back our gains and that we had lost. But the S&P hit a new high. That's what these green highlights are. They show the last 3 highs. Last time it had a high in terms of rates of return was back in August. Because of that 10.3% gain, it is now sitting at the highest return for the year at 17.97. We are at 32.14 for the year. We are not in our top 3. We hit our top 3 back in September, just before the big losses. But still, we're getting close, and we have just under a month to go. We'll see how we're doing. Our winning percent trades is up to 67% now. Again, we like to see that around 70. Profit factor getting close to 2. Anything over 1 looks good too. Let's take a look at our charts, just for people who are a little more visual like I am. So year to date, S&P just under 20. We're at 32. We did lose quite a bit on the way down. I would say this, in September and October, we do take some losses. We took about 8% loss. And the S&P probably took, in that neighborhood, but probably not quite as much. But coming back up out of it, because we missed some of the jump in the beginning, who would have saw that coming? But we're still outpacing the S&P fairly decently. On our 3-year year-to-date charts, looking back 3 years, and including trading just spiders and not SSO, S&P 17.9. Spiders lost a little bit because, again, they missed out on a couple percent at the beginning of that jump. But our game is this one, 32.14. Overall, we're just under a month to go for the year. We are still outpacing the S&P 500, I'd say, pretty significantly. That's a 12% difference. That's almost a decent gain for a year. So we'll take that. And you saw a little preview of trade 40, but we'll see what happens on trade 40 on the next video. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.